G'day folks, Jim here from FX Charts, Wednesday 19th of February. The dollar's been fairly mixed over the last 24 hours really. It's a bit lower against some of the majors following some weak US manufacturing data. And it's also made some gains, particularly against sterling, where the weak CPI number pushed cable a bit lower. And the Kiwi's also a little bit lower after the RBNZ governor once again reiterated that he thought the Kiwi was too high. But we're going to have a look at the charts. And the euro was it pushed higher after the New York State manufacturing index came in quite a bit lower than expectations. Got up to 137.75, and it's sitting just below that at the moment. The momentum indicators are generally positive for further gains. If we can break up here, we're going to get to this FIBO levels at 138.90 or 137.90, and above there we're going up to 138, sort of 30-40 area. This being the long-term downtrend resistance, which I can show you on the weeklies here. It goes back quite some way to sort of early last year, mid last year. So that's going to be quite strong resistance up there. If we do take that out, then we're heading back up here to sort of 138.90, and above there the wave's open, I guess, to 140, although that's some way off as yet. As I say, the momentum indicators, they look reasonably positive. Both the 4 hourlies and the dailies are also building up some momentum. So it does appear that we're going to push a little bit higher. Much will depend on the release later on today of the FOMC minutes, and whether or not the Fed see tapering continuing as it is, or whether that needs to be wound back a little bit. So that'll give us the direction for the dollar. But in the meantime, the euro does look to be headed a little higher. There's not an awful lot out of Europe today though, so I expect it to be fairly range bound until the States get in. Looking forward to dollar yen. Well, we saw that have a spike up after the BOJ left rates unchanged, but they eased back on some of their lending programs, pushed the yen a little bit weaker. Since then, it's kind of recovered, and it's sitting in this 102 to 101.70, I guess 101.70, 102.70 range. I suspect that's likely to continue. For the 1 hourly charts are showing sort of slightly negative momentum. While the 4 hourlies actually look to be a little bit more positive, and the dailies are reasonably neutral. So I wouldn't expect too much out of dollar yen today, and I think that pretty much largely 102, 102.70 should cover it. If we do see a dip, I don't think we're going below 101.70, and I don't think we're really going to get that low. Sterling, as I say, that's had a bit of a run down on the soft CPI data. It's recovered after the weaker US data, but it's since drifted back lower to finish around 166.80. Now, it looks to me as though we've made a bit of a top up here at 168.21 the other day. Looking ahead, we've got the Bank of England minutes and the UK jobs data today, and they'll provide the direction for sterling. But for the time being, the hourlies are reasonably flat, so I think we're just going to chop around here. I don't think we're going very far at the moment. The session low is at 166.54, I think it was. Now, if we take that out, then we're heading back down here towards 166. Much will depend on the outcome of the data. As the momentum is pointing in that direction, at least in the 4 hour chart, so it's pointing in that direction. And I'd be surprised really to see us get much above 167.25 today, where it topped out after the New York manufacturing index. The dailies, they're still pointing higher though. So all up, I think it's going to be pretty choppy, and you know, if we did see it down at 166, it's probably a buy down there for a return up to sort of 167, maybe 167.5 or so. But beyond there, I'm not really sure. Right now, I prefer to play it from the short side, as I say, and to sell a rally at 167, 167.25, but looking to buy it back down around the FIBO support here around 166. Dollar Swiss, well, that finally took out 89, the figure. It's been down to 88.68, which is actually very strong support. If we go and have a look at the weeklies, it's as you can see, it's sitting on it's the 38.2% of this whole run up from 70 up to sort of 97. So it's sitting there on this strong support. A break would take us back down to, we did have a spike low, and I can show that more easily on the dailies. We did have a spike low down here to 87.98 over Christmas. Hasn't been there since, but it does look as though we could be heading back in that direction to test that. But 88.68, so 88.70 is going to provide good support in the meantime. But the daily charts do look as though we're going to give that a serious run for its money and head lower back down here towards 88. On the top side today, I don't really see it much above 89, 89 and a quarter. There's some good resistance up at around 89.35, and I don't think we're going to see that today though. The Aussie, well, that having made a 1 month high at 90.80 after the RBA minutes yesterday, it then proceeded to drift all the way back down to 90, recovered after the US data, and it's now chopping around. It's pretty much unchanged. It looks a little bit heavy again at the moment, but the short-term charts are pretty directionless. The 4 hour is pointing a little bit lower, but we've got some good support down here around sort of 89.70. I'm not even sure we're going to get there. 90, the figure, will provide some support around here about the 100 and the 200 hour moving averages. So I think all up probably a fairly steady day. There's no real data out today for the Aussie, so 90 might hold it. If not, then I think we could get down to 89.70. On the top side, if the Aussie recovers, there's some initial selling going to be up at around 90.50. I don't think we're going above 90.80 today, but in the longer term, if we can get above this 90.80 level, then we're going to squeeze a little bit higher. The first resistance is at this FIBO level here. This is at 91.05. And then the 100-day moving average at 91.35, as I've said previously. Now, the daily momentum indicators are still looking reasonably positive, so we might see a bit of a move higher. So I still prefer, as with the last couple of days, of buying dips, and I would use 89, sort of 85, 70 is the area to look for to buy it, but with a stop loss placed under there, as I think if we do take that out, then we're probably headed back down here towards sort of 89.20 or so. And finally, the Kiwi, that's a little bit low as the Kiwi. That's breaking support here, and it's every time, as I've said before, every time it gets up to around this sort of 84 level, as we can see on the dailies, it doesn't like it up there. It's come back again quite sharply. Now it's sitting above support here at 83, the figure. A break might take us back down today to the 100-day moving average at 82.70. And then really we're just back in the middle of the choppy range. So I tend to leave that alone. But on the day, I think if we saw a squeeze back up here towards sort of 83 and a quarter, 83, 30, 40 area, probably a sell for another test of the downside, looking for a run down towards sort of 82.70. So that's about it for today. As I say, it's going to be the FOMC minutes that provide the major focus. Before then, we have got the UK data, the Bank of England minutes, and the jobs numbers. So sterling will be busy, but that aside, I expect a pretty much a range-bound session. So that really covers it for today. So have a very good one. Good luck with trading, and we'll talk to you tomorrow. Cheers.